Cast is now starting. All attendees are in listen-only mode.
All right, well, let's get started. This is Paul Shurin with Impact Data Source. Welcome to Impact Dashboard Live. Today we're going to be talking about Impact Dashboard, kind of walking through the basics of it, but we're also going to be highlighting some new features that we just recently released over the weekend. So they're just here at the very beginning of June 2019, a handful of brand new features. So just a few words about Impact Dashboard before we get into the actual app and take a look at it. Impact Dashboard is an online web-based software for economic developers to help them run the numbers on their projects. So Impact Dashboard is going to be able to generate information like what you're seeing here on the screen. So for a given project or a prospective project that you're considering, you can run an impact analysis to figure out how many spin-off jobs does that mean? What's the additional tax revenue that's going to be added for our local jurisdictions? And as you can see here, we're projecting things out over a period of time so you can capture the ramp up or phase in of activity. And we're getting really into the details, as you see on the right-hand side, the type of information that we're pulling together to boil it down to consider not just the benefits, but also the costs as well. A big part of Impact Dashboard, and I mean, as a function of a big part of what economic developers are considering, could be possible incentives. So whether they're tax abatements or different types of agreements in that regard, or if you're just trying to consider some sort of reduction in the cost that you're, or in the price of the land that you might be offering a project. So you're cutting them a break on the price of that land, and you want to think of that discount as an investment in the project. We can calculate the ROI and payback period for any type of situation like that. So just before we get any further, I want to back up and just make a quick clarification between Impact Data Source, which is our company's name, and Impact Dashboard. So Impact Data Source is our company. It was established in 1993 by my partner, Jerry Walker. We're specialized in consulting services for economic and fiscal impact analysis. Most often that means working with economic development organizations or governments to help them understand the economic and fiscal impact of those projects they might be considering and potentially economic development agreements associated with that. Impact Dashboard is a web-based app that we've developed over the last well, I guess we could say all 25 years or so, but ultimately Impact Dashboard was first released in 2015. We've continued to add features and capabilities to it. Today we have over 100 clients using that model located throughout the country. It includes smaller communities, smaller population-wise, of 10,000 or less in population, to large metro areas or multi-county regions, and even organizations at a state level that make it available to their members. So I'm going to go now into Impact Dashboard just to kind of show you how this is all set up, and we're going to do a real quick, brief overview of what Impact Dashboard is and looks like, and then we're going to jump into some of the new features that we've recently added in the last week or so. So right now we are deep in a particular scenario. We're actually looking at the end result ultimately. This is on a report page inside our scenario workspace. So what we see here on the left-hand side is a number of reports that we can view. We have the ability to look at the report, these summary reports, from the perspective of any of the tax districts that we've got included in the analysis. So on the left-hand side, we can see we've got the City of Arlington, Tarrant County, Arlington ISD, Hospital District, and a College District. We also have something called Community Report, which we'll talk about a little bit later in the second half of this. On this one-page report, this is pulling together all of that good information that you wanted to see all on one page in kind of an infographic format. So in this case, the City of Arlington is going to receive benefits of about $4.7 million. There's going to be costs associated with this project of about $1.3 million. And so on the net, it's $3.4 million over the 10-year period. We can see graphically what that looks like and how much those benefits, costs, and net benefits are each year along the way. On the right-hand side, we're summarizing the economic impact. So if there's 240 direct jobs, we're calculating there's going to be 182 spin-off jobs. We calculate that using economic impact multipliers. We're using, in this case, RIMS2 multipliers from the Bureau of Economic Analysis. They're going to be, the two things you need to know about those multipliers are, number one, that they're region specific, which we'll take care of. Number two, they need to be industry specific. So based on the specific project you're evaluating, you want to make sure you enter in the NAICS code or industry code to kind of make sure you're using the right multiplier for that project. So in addition to jobs, we can also see we're using multipliers to estimate our spin-off salaries. While the direct workers are making $65,000 in this case, spin-off workers make a little bit less, $33,000. The total capital investment in this project is pretty big. It's $70 million in terms of the buildings and the FF&E. And then we've got something identified as residential development. That's kind of taking this idea that if there are 240 new direct workers coming to the area, maybe 422 when we include all of the workers, how does that affect the local city, in this case, City of Arlington's population? Do we expect the city to have additional residents or people relocate to the area representing new households to the community? And in addition to that, will some of those people that relocate, will they build new homes and cause, an increase, say, in residential property? So that's what we're getting at there. You have a lot of controls over some inputs around there. So if you know a project is going to be bringing with them a number of workers, we can modify the inputs for that. Now, if I scroll down to see the bottom half of this one-page report, we can see now we go into more detail on those net benefits that we saw at the top. We knew that it was 3.4 million on a net basis. We knew the total benefits and we knew the total costs, but here we can see the specific revenue sources and the specific costs that we're calculating in this model. This is all essentially going to be researched and built in for you. Impact Data Source will be the one kind of figuring out what's the local sales tax rate, what's the property tax rate, how are we going to estimate some of these other revenues, should we be including income tax, local income tax, or just other sources of revenue and so forth. So all of this is very custom in this case to City of Arlington, but as we put a model together for another client, it might look a good bit different. Now on the right-hand side, we have an incentive analysis, and in this case, we're looking at a $900,000 incentive being paid out over several years. We can kind of see that graphically, the incentive amount getting paid out over multiple years. What we're going to do is compare that incentive, the $960,000, to the total net benefits that the city received. So that's our $3.4 million. We can see our orange line is showing that out by the very end, or in this case 10 years, we're hitting that 3.4 million. Now, if we have a reference line in here showing us our total incentive amount, which is the 960,000, we get an intersection and we can see that that's marked at 2.9. What that means is 2.9 years is our payback period. The city will have collected enough in additional net benefit revenue to cover the value of that incentive, $960,000. Just doing some math on that, we can see the per job amount is $4,000. And we can see if we do a rate of return analysis, it's about 36% average annual rate of return. Now, the final piece of information on this one-page chart just acknowledges the fact that really the $3.4 million is just from the city. The county, the school district, and these other districts are getting some benefits from this project as well. So if you wanted to see those benefits, you can certainly click over and see what's happening in the case for Tarrant County or the school district or any of the other districts. Now, we're here on this report page. The one-page reports are very nice. We can print them off, save them as a PDF. If we want a more traditional report, we can click over here to our detailed report. And this is going to have a little bit more of a narrative, some detailed tables. And as opposed to the summary report, which focuses just on one of these taxing districts, the detailed report is going to provide information on all tax districts that are included. In this case, it just happens to be 5. You could have a transit district and all kinds of other things. We're not necessarily locked into having 5 tax districts here. So this is where everything is heading. So as we think about Impact Dashboard, we're going to be generating these impact reports to help explain and evaluate potential economic development deals. So you can speak to your board or speak to your city council or other regional stakeholders to help them understand what's this project mean for the community in terms of economic impact and additional tax revenue. But how do we get there? So these are the reports. How are we getting there? So I'm going to back up, and now we're going to talk about how we put this information in. So here on the Scenario Info tab, we can see we have a number of boxes and inputs related to different aspects of the project. So for example, we can identify where the project is located. In this case, we've selected our different tax districts that are relevant. Obviously, City of Arlington, Tarrant County, Arlington ISD. We've also identified that NAICS code. In this case, we've got essentially a regional headquarters type of project, and we're pulling in, identifying the industry, and then pulling in our multipliers again from RIMS 2. It's pretty easy to search on this thing. We can kind of just find, let's see, warehousing. Just search, and we can see we get those multipliers. You can see these multipliers change based on the industry that we select. In this case, headquarters is a little bit higher than warehousing types of projects. Now, down here on the left-hand side, as we go down, we can see that we're asking about number of jobs and how many jobs are added each year. In this case, we're showing 140 jobs are being added initially. Then we're adding 40 jobs in year 2, and then 30 jobs in each of year 3 and 4. If we click here on these arrows, we can see we could actually specify the hiring schedule over 10 years. And we're just kind of showing the first 5 years to keep things as tight as we can on the screen. Now, there's a number of other inputs as we go down on this page. We can just take a brief look at them here. We've got the assumptions about workers relocating, essentially what percentage of the workers of the 240 workers will be relocating to the area. What's the average salary? What's capital investment look like? Are there any building permits and fees, taxable inventories, and then taxable purchases or taxable sales? Now, one of the things that you can see in this report right away is that we're estimating things over 10 years. That may not always be the case. For example, if you wanted to look at a project over a little bit longer period of time, we can do that. If we wanted to extend this out to, say, 15 years, it's really easy to do that. We're going to click on our settings icon, so the gear icon up here to get to our settings. Once we do that, we're into our settings area, and we can change almost any parameter. You do have access to every parameter in the model. Now, in this case, we've got some things locked up at first when you get here so you don't accidentally make a change. But if we hit Edit Defaults, just to kind of let the system know we want to make some changes, we can scroll down to the bottom here where we have our scenario length, and we can change it to 15 years. There's a number of other parameters that you can see here and on each of the different tax districts pages. So for example, we can see the tax rates that are being used for the city of Arlington, different types of assumptions around what we're going to be collecting sales taxes on and so forth. So all of that is accessible here in our gear settings area. Now, if we go back to our scenario info, what we actually changed was that 15-year analysis thing. So we've stretched this out for an extra 5 years. We had it for 10. Now we've got it for 15. If we remember before, our benefits, or our net benefits were about like 3.4 million. Now it's almost $6 million. So you can change any of these parameters on the fly. Everything updates and recalculates. The report, again, all in real time, is going to be recalculated. We're going to be looking at our numbers over the 15-year period. So we've been looking at the scenario info where we put all of our information in. On this right-hand side, we can see a summary, or essentially a dashboard of the results. We're first here on the city. If we wanted to click on the county, we can see what's happening for the county. They're getting about 2.2. We can click further and see the school, the hospital, all of the districts essentially. But let's say we wanted to model some types of incentives or tax abatements or analysis there. We can click on public support, and this is where we're going to have all of our various options. So I'm on a tab for the city. We could actually look at this for any one of our districts, but let's just go to the city here. And we actually already have some information plugged in. We've got a property tax abatement on buildings over the first 10 years. We can see if we stretch that out, it doesn't show anything in years 11 through 15. It's kind of a declining schedule over time, and we can see how that breaks out over here on the right-hand side. First off, we've got the total property taxes that would be due over 15 years to be paid to the city. That's these dark blue bars that we see here. So if we stacked all these dark blue bars on top of each other, that would add up to $6.4 million. Now, this abatement schedule that we've got here is resulting in the abated values for the building over time that we see here, these negative light blue lines. And if we add up all of those over this case 10 years, it's $1.8 million in an abatement. And then if we just kind of take the difference there, that gives us our net collection, which we graph out in our orange line here. Now, this is pretty cool to see a graph of exactly what that looks like. If we want to see a table, we can do that as well. So we can see exactly those values year by year and get those precise numbers. You could even copy this and paste it somewhere if you want to. So that's a property tax abatement. We have some flexibility around this if you wanted to call it a property tax exemption, or maybe if it's in reality going to be some sort of a rebate, we can do that. That just changes our language throughout, but the math stays the same. Now, the next section that we have here is a sales tax rebate section, and this is specifically the capital investment sales tax rebate. And this is one of those new features that we're going to go into more detail in just a little bit. But essentially, this is going to allow you to rebate some sales taxes on those initial purchases of construction materials and furniture, fixtures, and equipment. The next section is the project's taxable sales. So this one's also related to sales taxes and offering a rebate. But in this case, the rebate would apply to the taxable sales made by the project itself. So this would be if it was some sort of retailer or had some sort of retail element to it, and you wanted to rebate the local sales taxes that would be paid to the city and rebate those back to the company on its taxable sales. We can do that. Let's just plug some numbers in. If we do 100% in the first couple of years, we can see it calculates those types of things, just as we saw in the other analysis. I'm going to get rid of that because I don't really want to do it. Now, if we go to our non-tax incentive, we get down here. Non-tax incentive is a little bit of a generic term, but it just means that it's an incentive that's not tied to a specific tax revenue. And in this case, we can think of it as maybe a job grant or a paid for infrastructure, or maybe, like I said earlier, a discount, the equivalent discount on a piece of land. Now, we can specify our incentive a number of different ways. I'm going to start out with kind of the most basic, which is incentive amount. So let's just say I wanted to offer a $500,000 incentive because there was some infrastructure that cost $500,000. Now, in this case, if we're looking at this, we can see we get our year one incentive of $500,000 corresponding to what we have here. This is viewed as an investment in the project. The return on the investment is the net benefits to be received by the project over time. We've talked about this a little bit and how to run these numbers. We can see in this case it gets paid back even before year one. Now, we can choose, like we had set up earlier, an incentive per job of, say, maybe $4,000, so $960,000, and this gets paid back in 2.9 years. The other options that you have here are to specify a specific payback period. So for example, you say, well, look, we're going to do some sort of incentive, but we have to get paid back by 2 years. We can't go any longer. We're not going to, do something where it's over, like 2.9 years. We need to be 2 years. Well, if we tell that Impact Dashboard that we want a 2-year payback period, we can fix that here and we'll recalculate that incentive, and it'll tell us in this case for a 2-year payback period against this project, that's going to be a $750,000 incentive. A little bit higher rate of return, a little bit less per job as it breaks out there. So we can really specify any one of those 4 criteria and determine the remaining calculations. So again, all of that information comes together on our reports, and they update immediately. We can print these off, save them as PDFs, and there we go. Now, one of the really cool features of Impact Dashboard is the ability to do multiple scenarios. So far, we've just been in this one scenario looking at it. But if we close out of this scenario, we'll go back to our project control center. So this project, it's called Project Zip. We've actually got a couple different scenarios going. We were just looking at this original data, 10-year abatement, $4,000 per job. I gave it that name. If we don't want to call it that, we can rename it something else. But the cool thing is that what we can do is, let's say we might want to make a tweak off of this, and we want to change it to a $5,000 per job incentive. So if we click copy here, what we can do is create a brand new copy of that scenario. And we don't have to type all that information in again. It's going to remember exactly what we had going on in this project. So let's go with original data and 5,000 per job. I don't need to hit next because that's just going to take me through the location questions. We've already entered, you can see by copying it, we've already got this information entered. We can go to the public support. We'll go down to that non-tax incentive section. And now we can change this from what we had left it at the 2-year payback. We can change it to an incentive per job equal to $5,000 per year. Or excuse me, per job, excuse me. And so now that, if you remember, it was a 2.9, now it's 3.8 payback period on that. So that's a really cool feature about this. So we were looking at the individual scenario, and now we can see the various scenarios that we've created, the different iterations. Kind of think of it as like doing a save as. You've got a file that you're working on, and you want to make some specific tweaks, but you don't want to lose the first version. You can just make a copy of it and then start tweaking that copy of the scenario. Now over here, what you can notice is we can preview the results of any one of these scenarios. Right now, this one's highlighted in blue. It's got the preview icon on it. And we're seeing the results related to this scenario. If I wanted to, I could click here and preview this one. And in this case, that's a 10-year analysis, so it updates and kind of recalculates and re-shows all these numbers. And so we can kind of quickly go back and forth between these and modify them. So what are some other things that we can do on this project control center? We can apply tags to projects so that we can identify projects of similar type. For example, I'm using a tag to indicate fiscal year 2019 projects. I'm also using a tag to highlight projects that are headquarters related projects. I've also got this area where I can upload documents. In this case, I've uploaded a draft of an economic development agreement. You might upload other information that the prospect may be provided, and you just want to keep it all in one place here in the control center. So now we were first looking at a scenario, and then we went kind of one step out to look at all of the scenarios for a project. And now we're going to go one step further, kind of stepping out of the model, and that is a list of all of our projects. So just as we saw in that project control center for Project Zip, we had 4 different scenarios. Now we have these tiles that represent each project, and we can see some attributes around that. So how many scenarios and the tags that we've applied to it. If we want to rename a project, we can do it very easily. If we want to move a project from this active state to a potential outcome, whether it's a project that you're considering a win or a loss, or if you just want to move it to the archive, we can do that to identify the state of the project. And then finally, if we want to delete it, we can delete it. So in this case, I've got a bunch of projects you can see here on this page. But again, like I said, if we want to indicate some outcome, we can move it to our category of projects that we're calling as 1. And if we go over to our list of 1 projects, we can see that is coming up here. Now, if I go back to our active list, we can see if we want to create a new project, we just as easily click that button, give it a name. I'm not going to do it, but it's just that easy. We can filter for projects. So if we want to find all of our 2019 projects, we can do that just by adding that tag. If we want to find all the 2019 projects in the downtown, we can do that as well, just to find the various projects. And if we need to search, we can do that just by typing a few words. We were looking at this in a tile view, but you also have the ability to look at things in a list view. And so same information just laid out as a list versus tiles. Now, I'm going to go back and start talking about some of those new features that we just released. But if you have any questions, feel free to plug them into our chat box, and I'll certainly get to them as we're going through. And if you do have any other questions, if you have to leave early or something, feel free to follow up. Just email me, paul@impactdatasource.com. So the new features that we recently released involve one new reporting option, which even for our existing clients, they may not be familiar with. If we click here to our summary reports, we've always had these per district reports, but now we have this new report called a community report. And going to this community report is going to allow us, it's going to give us a new button here that we see, the ability to configure a community-wide report, so a report that includes multiple districts on one page. And so in this case, as I've got it configured so far, I've got the city of Arlington and Tarrant County. And so what I'm doing is I'm adding together the benefits and the costs and the net benefits for the city of Arlington and Tarrant County, and I'm graphing that. I'm showing, in this case, if we put those 2 districts together, this is what my graph looks like now. If I scroll down, we can see we've got columns for the individual districts, and we've got a total column, and we can see the benefits, costs, and net benefits as we had seen earlier. So this is a relatively straightforward new report. It's pretty cool that now, instead of just getting 1-page reports for a single district, you can get a one-page report for multiple districts all on one page. So for example, if we want to configure this, we could add all of our other districts. So for example, we could add Arlington and the hospital and so forth. But if I just add some of them, we can see that that puts another column in our list, and we can see everything getting added together. So you do have control over how you kind of combine these however you'd like. Now, I'm going to get rid of Arlington and leave it just at those two, because I want to go back to our public support and talk about a new section there that kind of corresponds to this community report idea, is the idea of a community-based incentive. So here we have tabs for each one of the districts. If I wanted to offer a tax abatement from the city, we would go here. If we wanted to do a tax abatement from the county, we could go here. But we've got this community tab now. This is the new part. The community tab allows users to essentially model one incentive against the combined net benefits of multiple districts. So let's just focus on a city and a county right now, but you'll see that you'll be able to include any of the districts that you'd like, or all of the districts if you wanted to. So city and county. So in this case, we were looking at our community report earlier, and we remembered that over the 15 years, City of Arlington and Tarrant County are going to have net benefits of about $8 million combined. Most of that, I think, was from the city. It was like $6 million for the city and $2 million or so for the county. But this is it pulled together. So this net benefit is now showing us the combined net benefits of those two districts. Now, if we want to compare an incentive against those net benefits, we're thinking of this as an investment on behalf of those two districts together against their combined net benefits. So let's just to make this look like something, let's throw $2 million in here. If there is some sort of incentive, infrastructure grant, or whatever it is that they're offering together of $2 million. So again, a community incentive of $2 million gets paid back in 4.5 years, again, against the net benefits to the city and the county in this case. Now, one additional thing you might want to do on top of this would be to allocate a portion of that $2 million incentive to each of the districts, and then see what their individual payback periods are. So together, in aggregate, we know it's 4.5 years is our payback. But let's just see if we split this in half and say that the city was allocated essentially having given half of it, $1 million, and that Tarrant County was going to give the other half. What's that look like in terms of the individual payback periods for the two districts? So if I scroll down here, that's where we can do that. So on our allocation area, we can choose how the incentive will be allocated to participating districts. If we choose equal share from our dropdown, as we see here, equal share, we can see that we give 50% to the city, 50% to the county. If we had 3 districts, obviously it'd be, a third, a third, a third. So we're allocating $1 million here to the city, $1 million to the county. And then if we go across here, we can see we actually have now our payback period calculated for each of the districts as well as overall. We knew the overall was 4.5. That's when it's combined in aggregate. Tarrant County having less overall net benefits, I think it's around $2 million, takes longer for them to get paid back on a $1 million incentive, 7 years. But the city of Arlington, having net benefits of about $6 million, gets paid back a little bit faster. In this case, we can see it's 3.1 years. Now, if we scroll down, we can actually see the city of Arlington's analysis. If we put the $1 million and we compare that, that's showing us our 3.1. And if we scroll down again, we can see the Tarrant County, $1 million with a 7-year payback period. Now, there's some other ways to allocate this, as we see in our dropdown. One would be proportional to net benefits. So what does that mean? That means that we're going to say how much of the net benefit, of the combined net benefit, does the city contribute to this whole picture, and how much does the county? In our case, we've got about 72% coming from the city and 27.5% coming from the county. And so if we do that, what happens is it kind of, obviously we're attributing or allocating more of this incentive to the city, allocating just $550,000 to the county. And what it does, though, is it equalizes our rate of return. So if we wanted to say that in aggregate, it's 27.5% rate of return, and the city of Arlington and Tarrant County, we're going to get a 27% rate of return. How does that break out if we need to split that money out? And that's how it goes. The payback periods are close, but they're not going to be the same in this case. So as we this just gives us another option in terms of evaluating incentives, gives another kind of way to generate a rate of return if you might want to see that from on behalf of those two districts combined. If I go to the report, we're going to be able to incorporate all this information together. So the cool thing is we've got we can make these districts line up with those districts participating in the community incentive. If we see we had city and county here, we scroll down and we can see those numbers just as we saw them on the other page. So we get to see our payback period and the amount allocated to each district and then the amount in total. The other thing so on the detailed report, we're going to have a section that shows us that payback period as well. So on the detailed report, we have these sections in here. If we go to our public support overview, it's going to take us to a section that just kind of totals up all the different types of incentives. We're trying to boil it down to say, what's the total incentive package? In this case, about $4 million when we include the property tax incentives that are on the table. But if we just go back and say, well, that $2 million incentive provided on behalf of both the city and the county gets paid back in 4.5 years. And that ROI summary is provided here as well, so that we can see that the individual district's rate of return along with the amount overall. If I continue to scroll down here, we'll go through each one of the sections, or excuse me, each one of the districts. So for the city of Arlington, in this case, we see their net benefits, and then we see their tax incentives, a property tax incentive, and then the non-tax incentive. This is the portion of the $2 million that was allocated to Arlington. So we see that here. The same would be true if we go to Tarrant County. We'll see that the portion of the non-tax incentives that was allocated to the county. So that's two of the big pieces two of the new features. It's a community report that's going to allow you to look at the impact of the project across multiple districts on a one-page report, and you can configure which districts you want to include here. The other kind of related feature is this community non-tax incentive, where you're able to identify which districts are participating in this incentive, how much is the total incentive, and then how, if we want to allocate that, how do we allocate that to these participating districts. So that's the first two items. The third item that I want to talk about is something we touched on briefly earlier. It's another form of public support or incentive, but it has to do with the sales taxes paid on the initial purchases of construction materials and furniture, fixtures, and equipment. So in a given project, so just kind of stepping back out of the model for a moment, if a community is considering offering a property tax rebate or abatement on the initial sales tax that they'll pay as they build their facility, so as they spend some money for construction, some of that might be on materials, and then some of that might be subject to local tax, we can rebate that construction materials tax. And in addition, if there's going to be some sales tax liability on the initial purchases of furniture, fixtures, and equipment and machinery, all that stuff, if you want to capture the value of the rebate on that, you can do that as well. So just to kind of connect some things up before we come back and play with this a little bit, I'm going to go to our scenario info page, and I'm going to look at our capital investment section. And here we can see we've got some investment in buildings and other real property improvements, $50 million, and then furniture, fixtures, and equipment investment of $20 million. And so when we go to our public support, we see that section for sales tax rebates for capital investment. We're going to have the option of rebating those taxes, and we can do it either at 100% or 50% or whatever amount we want. We can see graphically, we only have a bar. We only have the $280,000 in taxes. It only happens in year one. And that's because, going back here, jumping around, on our scenario info, we only have capital investment in this project in year one, okay? So we're going to say the $50 million in the building improvements, we're going to make the assumption that some of that is for construction materials, not all of it. So 50 million, we'll say maybe 50% of that is for construction materials. And then in addition to that, they may not purchase all of those construction materials locally within the community. And so if we want to kind of back out of that a little bit, there's going to be some parameters to account for that. So let me pull up my a couple slides to help kind of show this. We're going to we're going to click forward a few just to kind of show um, the ones I want to get to. So this is where we're going to talk about going from capital investment and to getting a sales tax rebate. So we've got $50 million in buildings and other real property improvements. It goes through a number of things before we figure out how much sales tax does that add. Like I mentioned, some of the 50 million will be for building for materials. So some percentage of the building cost will be for materials. Then some percent of the materials we purchase locally, essentially in the city of Arlington. And then the next step, obviously, is we need to apply the sales tax rate. So all of these things that you see here are parameters in our model, and you have the ability to adjust. So we have a default for building costs for materials, a percent. It's 50% in most models. And then the percent of materials purchased locally, we look at the construction location quotient and do some things, and then there's a parameter in there for you. If we know it's going to be 100%, you can adjust it. And then obviously the local city sales tax rate or the district sales tax rate, whatever it would be in that case. Now the other thing, so the 280,000 in this case isn't all related to the building. A portion of the 280 is actually related to the FF&E, the sales taxes collected on the FF&E purchases. So again, we've got a couple of different parameters at play here. We've got a percent of FF&E that will be purchased within the city of Arlington, and then we've got that tax rate, and that's going to help us get to that $280,000. So again, you have the ability to adjust these parameters when you get into the model. We can see what they look like in the actual model. I've taken some screenshots of each one of these. So in our case, we're saying that 50% of the construction expenditures for materials. We're saying that 40% of that will be purchased locally, and then our sales tax rate is 1.75. On the other side, with the furniture, fixtures, and equipment, we've got 30% of the FF&E will be purchased locally, and then the local sales tax rate is again 1.75. So as all of that comes together, we could rebate some of that. So if we just do, let's say we were only going to do the materials, we can see our construction materials is $175,000. And just doing some math, obviously, if that was 100%, we've got 105 that we're going to keep, that we aren't going to rebate. That would be the portion of the FF&E purchases. We can also rebate that if we want, either 100% or less. And we can see, as these are stacked on top of each other, how much each one is. We can do 50% or whatever schedule we want to do. And just as I pointed out, if let's say that they were going to actually have some investments in later years, the graph would look a little bit different as well. Now we can see, looks a little funny, but now we have some amount that we might be able to rebate in these other years. And you have the ability year by year to determine those percentages and those amounts, or whether or not you're going to do it. So that's the capital investment sales tax rebate section. It has a couple parameters, as we saw with our PowerPoint there. It can be a little tricky to follow the math through to figure out where we're getting the 630,000, for example. But let me know if you have any questions. It's actually not all that tricky. The last new feature that I'll just briefly touch on is the, and I don't know if this is going to work. If we go to, if we wanted to account for calendar years in the model, so a lot of the tables that you'll see are year 1, year 2, and year 3, and so on. If we wanted to identify a starting year to say, well, it's going to start in 2019 or 2020, we can do that as well. I don't know why this one, I think there's something wrong with this scenario, because every time I try to load it, it takes forever. But let's try it one more time. We should be able to see. So now in this case, we can see if we're trying to identify the year in which the employment is being added, it becomes a little bit easier when we can see year 2019, 2020, and so on. This is an option that needs to be enabled on our side. So if you're an existing client and you want to do calendar years, let me know. There's a parameter once you have that enabled, there's a parameter here where you can change it. So if you wanted to have a project starting in 2021, you're not really they're not starting right away, they're not starting in 2019, we could change it so it's 2021, and now that year starts at 2021. So anyway, that can be helpful if you're trying to look at some of these numbers, for example, like the taxable property um, over the period. So 2021 is showing us, and by 2030 it'll be 63 million, or whatever you need to kind of nail down there. But still not seeing any questions here in our on our GoToWebinar. If there are any questions, feel free to type in, or again, reach out to me directly. I will say Impact Dashboard is an online subscription-based product that is supported by Impact Data Source. So the way it works generally is there's an annual fee. You have access to the model for throughout the year. You can create as many projects as you want, so an unlimited number of projects and scenarios, so as many iterations as you want to go through. We keep the model up to date, latest tax rates and other parameters and information. We'll make sure that you don't have to do all of that research to figure out the different parameters. If you have questions using the model, that's part of the annual subscription as well. So essentially, we will do a training when we first set you up, or if there's any turnover in your office and you need training for a new employee. And then we're also available throughout the year if you have a question. You ran the analysis and something looks too high or too low or just not working right, give us a call and or send me an email and we can work through that. That's pretty much everything I wanted to run through. If you have any questions at all, feel free to send me an email or give me a call. Again, this is Paul Shurin with Impact Data Source. The email address is just paul@impactdatasource.com. Thanks everybody for showing up today. Appreciate it.